You are listening to the New Jersey Business Podcast with your friend, host, all-around good guy, and co-owner of Get It Cleaned, Paul Valverde. Now, on to the show.
Hello, New Jersey. Thank you very much for joining us today, whether you are watching this video via YouTube channel or Facebook or listening to us through the podcast. Thank you so much for tuning in. I have the pleasure to have with us today Robert Bura, a public adjuster from Metro Public Adjustment. Robert, welcome to the show. Thank you so much for joining me today. Please tell us about yourself.
First of all, thank you very much for inviting me and the opportunity. What we do as public adjusters is something that 90% of the general population has never heard about. A public adjuster is licensed by the Banking Insurance Commission of the states that we operate in, and Metro is the only nationwide public adjusting company operating in all 50 states, basically. So we're a resource, a free resource for property owners, commercial and residential, to be public advocates, to teach people all the things that the insurance companies spend billions of dollars advertising so you won't do. We teach people the dirty little secrets the insurance companies don't want you to know about. And when you do have damage to your homes, we teach you why you should never call your insurance company, why you should always public adjuster first. And we average 300 to 600% higher settlements, and we get our clients all or most of the money up front. If you know anybody or you yourself listening or watching this have ever had an issue with your property, getting an insurance claim, you know that it's the leaky faucet method, meaning the insurance companies will drip and drab money to you. When you purchase your house, most people get a mortgage. And with the mortgage comes two requirements. One is to pay the mortgage off on a monthly basis. Number two is to maintain the value of your house. Most people will do projects in the house to improve it, renovations, etc. But when severe weather or something happens to your home, you actually have what's called a financial insurable interest, is what's called an insurable interest, to maintain the value of your property. You have a financial contract with your insurance company. So that is something that you have because you have that. And the insurance company doesn't. The insurance company will drip and drab money because they do a lot of things because people don't know their rights. Technically, they don't have that right. So we will get our clients all or most of their money up front. I ask everybody I talk to 3 questions. Number 1, do you trust your property insurance company? Number 2, if you went to court in a litigation, would you be sharing the same lawyer with the other party? Would you want somebody representing you in your own best interest? Number 3, are you aware that 90% of property insurance policies are incorrect? They contain fiscal gaps ranging from hundreds to hundreds of thousands of dollars in missing coverage, provisions missing improper dollar amounts. Perfect example is, this is a house in New Jersey, Tropical Storm Isaias last August, okay? They came to me to help them. I could not help them. Why? Because they did not know when I pointed out to them that they had a 3% deductible for wind damage to the home. That was $16,000. And that discount saved them $60 a year. They were more than just upset. People don't realize that 90% of people have a problem with their policy. Everything that I do is free. You never put your hands in your pockets. We are public advocates provided by the Banking Insurance Commission. So how do I make my money? I get you 300 to 600% more money. I get you all or most of the money up front, and I get a percent of that. So would you rather have 100% of this or a little less of this, if you understand what I'm saying? And
So we operate. Robert, for those listening in the podcast, Robert made a gesture with his hands when he said 100% of this, and it was a small portion versus the majority of a larger portion.
I
So,
forgot
Robert,
that this is both broadcast.
yeah,
Sorry about that.
don't worry, Robert. So, Robert, I think most people don't know about this. I certainly did not. My question to you is, how did you find out about it? How were you originally introduced to this industry, and how is it that you become involved?
So back in 2015, I had a tree fall in my house. For those of you who are physically watching, not this tree I already explained to you. So I had a tree fall in my house after a storm in 2015. I fought with my insurance company to get about $16,000 to $18,000, not knowing what I was doing. Most people never read the annual declaration pages they get for their insurance company because they don't know how to read, or as I jokingly say, you can't read it without a Captain Crunch secret decoder ring. Younger people won't understand that what that is, but most people will understand that reference. The point is, you look at it, it's in Greek. You don't understand it. Well, anyway, I looked at mine 2 years later and discovered that my rates had tripled. I went to I won't say which insurance company, but it's one of the top three that advertises on TV, the most spends the most money, and they've seen a thing or two. Oh, did I just say that out loud? Uh, anyway, a third generation insurance agent, coached his kids in everything from T-ball to major leagues, basketball, PTA, the whole 9 yards, Boy Scouts. And I went to him and I said, Mr. Insurance Agent, not going to use names, why are my rates so high? And here's the problem. He said to me, and he believed this because this is how he was trained, Robert, we gave you all that money a couple of years ago. You've got to pay it back somehow. We're not a non-for-profit. And after, I can't repeat what my reaction to that was, but I said to him, what about the 18 years of premiums? That doesn't count. We only go forward. We don't go backwards. Oh, in addition to that, when I was introduced a couple months before this happened, I discovered, well, a couple months after this conversation, I discovered when I was introduced to public adjusting that $18,000 should have been closer to $25,000 to $40,000.
Wow.
So I was introduced a little period after that at a job fair to public adjusting, never heard about it. Sat down with the guy who hired me, and with the information I had at hand, again from sitting down for an hour with him, I was able to get my insurance company to write me a letter of apology, quotation marks, apology, for a bookkeeping error they made. And it's funny how those bookkeeping errors are never in the client's favor. Restore my rates back to what they were, and refund me in excess of $2,000 for overages and charges. Now, they didn't do it out of the kindness of their heart. I had to go to the New Jersey Banking Insurance Commission and file a formal complaint. And in about 3 months, I had my letter of apology and my refund. So here's other things. For example, most people believe the big lie. I'm not putting a claim in because my rates are going to go up. That's what most people believe, as well as bundle and save, which is also another mistruth. Well, anybody who knows what actuary tables are, they're based on zip codes, area codes. That's what every insurance of any type is based on. That your policy is based on actuary tables. Your policy is based on the expectations of 1 to 3 claims every 5 years.
Mm-hmm.
The insurance company is not supposed to raise your rate for a single claim. But do they do it? Yeah. Why? Because they get away with it 90% of the time. An average property owner spends $30,000 in policy premiums and never puts a claim in. In fact, you may be entitled to as many as 3 claims every 5 years, but people are terrified of their insurance company.
Mm-hmm.
The insurance company spends billions of dollars in false, misleading advertising and mistruths. And people are terrorized. I had a woman who I probably could have got her 20 to $25,000 to $30,000 in damages. She was afraid because of what happened in Sandy that another claim would destroy her good relationship with her insurance company. But provided with all the documentation, she was terrorized and she decided not to go forward with a claim. This is the kind of stuff I hear all the time. Most people who own property have damage, have an issue with their homes. A good percent of that has the potential to be an insurable claim. Most people don't realize what is covered under their insurance. Anything sudden, anything accidental, anything that happens in a reasonable period of time, which is a whole other podcast conversation, and is not excluded in your policy, has the potential to be insurable loss. I'll give you an example. Your 16-year-old daughter comes home at 2:30 in the morning and she has an 11:30 curfew. Good parenting 101. Go to your room. We'll talk about this in the morning. Nothing good will happen of this. But a large percent of people have it out with their daughter from frustration,
At
from
2:30 in the
anger.
morning.
And you're there and you're next to a wall and your hands are flailing. People listening, I'm flailing my hands, and you accidentally punch a hole in the wall. That actually has the potential to be an insurable loss. But probably doesn't make financial sense to put a claim in. It's not a lot of money. But if one of two things happen, you go through the house and you have multiple holes in the wall, now you're talking, or you punch a hole in the wall accidentally, something comes crashing down on your dining room table. That's a $6,000 or $8,000 dining room table, for example. That's something you would look at potentially. People have no idea. One chip, one crack, one piece of wood that's cupped a little bit because you had an accidental discharge or an overflow of water has to be an insurable claim. 65% of calls to the insurance companies result in a denied claim. Why? Because people use the wrong words. And as importantly, if you call your insurance company up and you have a conversation with them about anything, literally anything other than making a change to your policy, most insurance companies actually consider that a claim. It's called a non-payout claim. So here's an example of a claim that you talk yourself out of. Your water heater bursts and your basement floods. You call the insurance company and you tell them that. The insurance company is going to go, hey, we're here for you. We're on your side. We're here in your moment of need. Excuse me a second. I have to go throw up in my mouth. And then they're going to tell you your claim is denied. Why is your claim denied? Well, you don't have flood insurance. You use the F word. Yet you have homeowners insurance. Flood insurance is FEMA. It's something completely different. Number two, your water heater is technically an appliance. And unless you have a provision to cover appliances or a separate homeowner policy to cover appliances, your claim is going to be denied. But I will take that claim on because I will explain, or we will explain to the insurance company that our client has had an accidental discharge of water from an enclosed pipe connected to the water heater. As a result, the following damages occurred. A large percent of our business is reopening up claims. Claims that were denied unwrongfully because maybe you used the wrong word or wasn't presented properly, or claims that were paid out pennies on the dollar. An average insurance payout by a recent study showed it was 18 to 22 cents on the dollar is what you'll get. It's just literally criminal. So I can go back 1 year from when a peril damage happened. I can go back 1 year on a denied claim or a claim that was improperly settled, or 2 years on a fire. Let me ask you, do you own a home?
I'm a renter.
Okay. Anybody in your family own a home?
Yeah, of course.
Anybody in your family who owns a home has a fireplace?
Yes.
Okay. Anybody that has a fireplace and uses that fireplace on a regular basis probably has smoke damage. The smoke gets into the carpeting, the upholstery, the fixtures. It gets into your medicine bottles. It gets into everything. And based on how much extensive damage is, it's tens and tens of thousands of dollars of damage. You have no idea. Like I told you, most people. I had a woman drop a iron cast pot on a porcelain floor. It was about 12,000 square feet ranch. Okay, one floor ranch. The floor was a whole entire house. The whole entire house, except for a couple bathrooms. Okay, I got her about $16,000 because the only way to repair the floor is to replace the entire floor. Your insurance policy is an indemnity policy, meaning to get your property whole. I don't fix, I don't match, I don't upgrade, I don't repair, I don't make like new. I get your property back to pre-loss condition, pre-loss value, because you have that insurable interest to maintain the value of the property.
So, Robert, I have a question for you. Um, since most people don't know about public adjusters, how do people find you? Or how do
And I
you
was waiting for that question.
go ahead?
Well, a lot of it is word of mouth. A lot of it is being introduced to other people. We
Mhm.
do policy reviews. People in my business go through social media, networking groups. I do adult education classes in church and libraries. I work with a lot of real estate agencies. I work with a lot of contractors and other people. We have found our company, Metro, which I told you is the largest and oldest, has been around
Yeah.
28 years. We've done 1 million claims. Okay, we're A plus rated by the Better Business Bureau, and we have found that advertising for our services doesn't work because if you advertise for something that you've never heard of, chances are you're going to dismiss it because you never heard of that. We're in the process of coming out with a whole new advertising agenda, and it's going to be geared towards educating. Our catchphrase is to educate and protect the policyholders.
So,
So there's a bunch of us running around doing this.
Robert, I have another question for you. So, you gave an example a little bit ago about someone whose home got damaged and their policy had a 3% deductible and wind damage, right? So, at which point should people, or is the right time for people to contact someone like you? Is it at any given time, or is it when an accident happens?
Yesterday.
Okay, so in other
So
words,
when someone does have an accident, when something happens to a property, we tell you never ever call the insurance company. You call us. We come out. We take a look at your policy. We'll teach you a few things, and then and hopefully you'll agree to have us represent you. The insurance company is not notified. I will then send out one of my field adjusters with an average of 20 plus years of experience to scope it out. If it turns out to be a good claim, that point and only that point, with your agreement, we will then go out and reach out to the insurance company to represent you. At which point we tell you, don't talk to the insurance company. We're your legal representation. Or if it's not a good claim, we'll tell you it's not a good claim, and the insurance company's never notified. Or we'll do a home inspection, and many times we'll find something that actually is a claim. That's one place. The other place is to reach out to me right now and have me do a complimentary policy review to examine your policy, teach and educate you all the truths. I don't tell how many times I said, I wish I would have known you a couple of years ago when this happened. I hear things like this all the time. So my recommendation is if you're in the distance of my voice, my information is up on the screen for you who are watching it, and I'm sure my contact information is going to be provided for those listening to reach out to me and have me do a policy review. Now, I'm not sure how widespread this cast is going, but our company covers every state in the country. I personally am licensed in New Jersey, Pennsylvania, Illinois, West Virginia, and Maryland. This last week, I wrote a health claim in Minnesota. The week before that, I wrote a vandalism claim for a beauty parlor in Memphis, Tennessee. And I think I've got a claim pending in Arizona, potentially. I'm waiting to
You know,
get information on that.
now
So
that
I
you,
recommend you reach out to me and
Mhm.
have me do a policy review with you so you can at very least get a master class in how insurance works, something they don't teach you in school, a life skill that you really need to learn to protect yourself.
So say Robert, someone from New Jersey contacts you and you do a policy review and you identify that there are some things that are not to the favor of the homeowner. What options does the homeowner have at that point if they have a sucky policy?
So, in general, any insurance company that advertises on TV is an insurance company that you do not want to have your property. I only do property insurance with. I don't do health. I don't do auto. But you
Yeah,
don't want to.
property.
Why? Because the way they settle claims and how much they limit issues. I always recommend you go to an independent insurance agent. Your named carrier agent responsibility is to the stockholders. An independent insurance agent fiduciary responsibility is to you, the client. Plus, he knows more. He or she is better educated, and they will shop your policy around to multiple carriers in your state and most likely get you a better, proper policy for a very competitive price. Okay. When I learned the truth and I unbundled from that guy who's seen a thing or two, I saved over $2,500 my first year. I
Wow.
saved almost $1,800 on my property insurance and got everything I needed with the amounts in the right places.
Mhm.
So if you need a recommendation from an independent, I've got multiple people I use. I don't make any money by introducing. I don't ever want anybody to refer me to anybody. I hate the word refer. It's very cold. I like to substitute that with the word introduce. Can you refer me to a couple of people or can you introduce me? It's very subtle, strong. So I can introduce you to multiple independents, or if you have an independent, go to an independent. It will be worth your while. Trust me. We've been doing this for a long time.
Robert, you also mentioned that you do residential as well as commercial. Is there different categories within the commercial realm, or it's buildings of any size and any type?
So here's the difference between policies for residents and commercial. In a resident policy, by the way, people listening, there are actually 8 type of homeowner policies and 3 type of commercial dwelling policies. If you have the wrong type of policy on your house, I don't care if you've been paying your premiums for 25 years, the insurance company won't cover you if you have a damage. They'll sell you the policy, but they won't cover you if you have the wrong. I had a claim last year. Woman, turns out she had a renter's policy for 20 years, and I couldn't help her when she had damage to her roof.
Oh my.
That she had the wrong policy. So in a residential policy, the most common are called HO3s and HO5s. These policies encompass everything except what's excluded. Commercial policies, I don't know if I can say this and be politically correct. They're Chinese menus, meaning you pick what you want. You get nothing and you have to add what you want.
Yeah.
Hopefully that's not politically incorrect in this state. You never know. I don't want someone yelling at you or me that, that's a racist comment. I apologize. I'm not intended. I know I have to come up with it. It's a blank slate and you have to pick what you want. That's the difference between commercial and residential policies.
So I guess more than a menu, it's more like a buffet.
Yeah, you go in the buffet and you pick whatever you want.
Yeah.
Exactly. That's what, you know what? I'm never going to say that again. I'm going to say it's a buffet. You go into and you pick what you want off the buffet table as far as
Yeah.
coverage. That's
Okay.
much better. Thank you. I'm going to go with that.
I'm sure people understand, but Robert, I appreciate you educating us. I know that we can talk on this topic for much longer. I'm sure that I mean, there's several questions that come to mind, and I'm sure this is something that I think most people would put in the kind of in the back burner. They're always like, oh yeah, that's something that I should do.
Get
But
around to it, right?
yeah, but folks, it's part of being a good steward, not only for your personal finances or your business finances, making sure that you have the right policy or making the right payments and not overpaying, but also that should you come into a situation where you have to file a claim, that you are paid the right amount. This is something very useful, and it's one of those things that you want to do before you run into an accident or a situation or damage is actually done and you have to file a claim. I will urge all of you who are listening and viewing to contact Robert. All of you that are in New Jersey, make sure you give him a call, whether you own a business, a building, or a home, to do a complimentary policy review and go from there in terms of what could be done for you, and also educate yourself. We will be linking Robert's contact information, including his landing page, so you'll be able to follow up with him and get in touch with him. Robert,
Can I just throw something in?
yes, please.
Anybody who's watching or listening to this is looking for a part-time job. I am actively hiring people all over the country. We pay people. In many cases, we give you a good percent of all the study material and the information to pass your state exams. So if anybody's looking for a well-paying part-time job that can lead to a full-time job, I would love to speak to you as well.
You know what? Thank you very much for adding that. Robert, it's been a pleasure having you. Thank you so much. And have a good one.
Thank you very much. I appreciate your time.
Thanks for tuning in to today's show. If you or someone you know would like to be a guest on the show, go to NewJerseyBusinessPodcast.com. That's NewJerseyBusinessPodcast.com. We can't wait to hear from you and your business. You can also visit our website to learn about sponsorship opportunities and how to qualify for a complimentary gift. Thanks again for listening to the New Jersey Business Podcast.